Many buyers are sitting on the sideline waiting right now, thinking home prices are going to have a big drop. I want to share with you in this week's Todd Talks video, the second half of this year. So we're going into the second half for 2025, what the forecast looks like, what prices are actually most likely to do so you can make a great decision. We're also going to take a quick look at mortgage rates and where they're headed. So let me start by showing about the price action. All right, so this is the most recent forecast, and went in and checked with Fannie Mae and various organizations, Wells Fargo Bank, National Banker Association, National Association of Realtors, a couple other organizations. There's Zillow in there. And sort of like what's the housing forecast looks like. When we average them out, it's 1.5%. So here's the thing. I had predicted at the beginning of the year 4%. I still think we might be around that. Keep in mind, real estate's really local. So what's happening is some areas are seeing big pullbacks, but other areas are keeping healthy prices up and slightly even over. So on the big picture, we're probably going to see anywhere from 1.5 to that 4% range price increases. There was just an article yesterday at CNBC about how sales are slow, but prices are at record highs. So buyers are still sitting on the sideline waiting for rates to drop. So what you can know is this: as a buyer, the prices are flexible right now. When you see a property that's been sitting for more than a week or two, sellers are offering concessions, they're offering price concessions right now. And you can use those to pay your closing costs, buy your interest rate down, or get a better price on the house. So it's a great time to buy. It's not going to stay that way. The confidence in our economy right now is growing weekly. So people are becoming more and more confident as jobs are coming back into the United States, manufacturing is coming back into the United States, and inflation is going down. We're starting to see an uptick of confidence, and that's a forward-looking indicator of what's going to happen. So let's look at interest rates real quick, and then I'll sort of button this up and telling you what I think we're going to see. All right, so this is Fannie Mae, Mortgage Banker Association, Wells Fargo Bank. Average of all three, quarter three is 6.68%. And really, frankly, right now, the average is 6.72. They're saying by the end of the year, 6.58, and by, the spring, 6.43%. So that's what they're saying. But let me tell you the reality. The reality of it is that I'm quoting rates typically in the upper fives and low sixes right now. The sellers are willing to pay discount points. In other words, the sellers are willing to give you money in which we can use to prepay interest. Mortgages have a unique feature in which you can prepay interest through a device called a discount point. And we can get the seller to give us money, we can prepay interest, and you can end up getting a rate in the low sixes, upper fives, and in many cases even lower. I've got them even to low fives, and if it's a new construction, I've got rates as low as 4.99% on new construction. So our rates are phenomenally good, but what's going to happen is for the general public who just see these averages in their mind, it's not picking up the news right now because the averages are still over 6.5%, like 6.7 as I'm making this video. But when that average hits 5.99%, there's a direct relationship to the lower rates and demand for housing. So as it gets lower into the rate, we hit 5.99 and below, which is coming probably more aggressively than that chart just said. It'll probably be early into the spring next year. You're going to see a huge number of buyers re-enter the market. And as that psychology starts to take over and the FOMO, or the fear of missing out, kicks in, you will see a rush of buyers and not enough inventory, and you'll start to be more in a multiple offer situation, or at least more competitive offer situation with other buyers, which means no more concessions, no more seller pay closing. So if you're looking to purchase a house, let's say you're a buyer that has a massive amount of cash, low debt, no problem getting qualified for a house, it's a great time to buy because you can get a better price, you can get a better financing package on it. The flip side of that is, what if you're the other side? You are a buyer that has income, but you're lacking cash. Like I have a buyer just today that we were able to use down payment assistance and seller pay closing and get them into a property for $4,000. Those are the kind of things we can do right now, probably through the end of the year. So if you're in that boat and cash is an issue, or if you have a family or friend where cash is an issue, reach out to me. Please connect me with them by sending me their name, cell, and email. I will build them a great mortgage plan and help them buy a house. Because when this market shifts, which it will, it's going to be a lot harder for everybody, but particularly for those buyers. So thanks so much. Hope you found this helpful and hope you have a great day.